Good morning and welcome to video 7, and we are talking today capital gains income. So just a quick recap. We have covered 6 different types of income, and within each of those categories we have talked about different ways that you can generate those types of incomes. So in our very first module, we talked about earned income. So earned income is where most people feel that they have a job, they're working for someone else, but we actually talked about being an employee of your own company. In module 2, we talked about profit income, and that is where you sell a product or a service and you draw down income from the profit that is left after you've paid all your costs and your taxes. The third type of income that we discussed was dividend income. And we talked about different types of dividends so that you could bring in income from your own business, income from someone else's business. So different types of dividend income. Then we spoke about residual income, or passive income as it's known. And residual income is where there are different types of businesses that you can build that will generate residual income for you. There are also things you can do like creating products, creating membership sites. These are all ways that will bring in residual or passive income. And then we talked about interest and the different types of interest that you can earn, either through bank accounts, through credit unions, through bonds, through treasury products, and through peer-to-peer lending. Then in the last video, we spoke about rental income. We talked about how you could get rental income from property, from garages, storage units. There's a whole range of different ways. Anything that you have that you can rent out to somebody. And today we're going to talk about capital gains. Now, capital gains is a tax. And any time we make money, we have to pay tax on the income that we generate. And capital gains is no different. So what are some of the ways that you can make income, capital gains income? So one of the very first ones that most people will think about is property. Now what happens in property is there is what people call flipping. Right, so when you flip, you buy a property that you are going to do up with the sole intention of reselling that property. You don't intend to do anything with it. You are just improving that property so you can sell it. And that is a lot of property investors, that is the sole way that they generate capital gains income. It's their main income. So they will go to auctions, they will look around at the worst property in the street, and then they will set about renovating it. They will then revalue that property, see what the market is, and they will sell the property. The cost to them is all their expenses in buying that property, refurbishing that property. They're all legitimate expenses they can take off the profit. And then whatever they have sold the property for, the difference is the capital gain. And that is where they pay their taxes. Capital gains income tax. But another way with property is that you can buy a rental property, you can have a tenant in it, and then when that property is no longer beneficial to you, you can sell that property at a higher value than you paid for it originally, hopefully at a higher value than you paid for it originally. And then you pay tax on the difference between when you bought the property and when you sold it. So rental properties are a capital gains tax. Other types of capital gains, one that is very popular is art. Now, how many times, or have you ever been to an art gallery, seen a painting and bought it, and then thought, how much is this going to be worth if I sell it again? So capital gains tax is payable on an asset that you buy and then you sell it for a profit. And that is, like I said, it could be art. Classic cars. Now, the number of people who love restoring cars, they will buy the car, they will spend all their time restoring it, and then they will sell it. So the profit that they make in the value of the car and improving the value of the car, that is their capital gains tax. And there are people who go and buy classic cars just because they want to own it, and then they get fed up with it and they want to on-sell it to someone else. There are auctions. Sotheby's are a great one for auctions. There are car auctions. There are auctions for just about anything that you can buy, improve the value, or wait for the value to go up and then sell. And that is capital gains. Now, most governments will have a definition, a legal definition in their tax laws as to what is deemed a capital gains tax. And that is something that you need to be familiar with, because you need to, if you want to generate a capital gains tax, it's a totally different tax, then be aware of what qualifies under capital gains tax. And it is a legitimate way to make money. Most people say, oh, I'm not going to let the government get any tax off me. But it doesn't matter how you make your money, the government are going to get tax. So don't worry about capital gains tax. If that is the market you want to operate in, or you know anything that is of value, undervalued and going to go up in value, then capital gains tax is just one of the different types of income. So you have now a whole heap of different streams of income that you can generate. And in the next video, we're going to talk about royalty income, which is the last type of income. So remember, the more income streams that you are able to generate for yourself, the better you will survive and thrive in any economic conditions. And if you have more than one stream of income within each of the categories that we have talked about, then you will always have something that's going up or something else is going down, and you will always have income coming in, no matter what the economic situation is. So get your thinking caps on. Go back through some of these videos that we've recorded and just listen to some of the suggestions that are in there and think, what can I do? And make yourself a list and list the 8 different types of income and see how many you can generate within each of those 8 categories. My suggestion is you start with one and you just work through so that you've got one in each of the 8 categories we talk about. And then if you've got ideas to go into the others, then make another column and start ticking off that you're earning income in that category. The more streams of income you've got, the better. And one of the things with most of these streams of income to remember is many of them can be automated. So once you've done the work of setting it up, those types of incomes will come in. And you don't need to work them every day and stress that, oh wow, I have to have all these different types of income. I can't do them all. Much of it is automated. And that reminds me of my video in the Wealth Mindset, which we talk about how to automate. So, capital gains tax. What can you do in this category to generate capital gains tax? I'll see you in the next video.